Good morning, this is Tom Aspray with the Viper Alert Market Wrap video for the week ending August 5th. The jobs report was somewhat of a shocker on Friday, as I didn't hear anyone think it would be double the expected, but the market absorbed it pretty well. Not a uniform gains across. The transports were down, the utilities were down, and the Dow was actually down, of course led again by the QQQ, and made money last week in the futures. Let's take a look at what transpired. We came into the week on the long side from this buy a week ago Wednesday. We were in there at around 39.62. We'd hit all three targets here, and then we're stopped out early Tuesday. Stopped out at 40.99. So still made a little bit on the remaining position if you still had one. Short position didn't do much. We had a couple of spikes to the upside, but the close only stop resulted in only a 12.25 point loss. It was underwater during this bar for a number of hours or so. Flipped back to positive at 5:20 a.m. on the 3rd, and had a pretty good run. Quickly met the first target here at 41.5660, but then moved sideways, and then of course turned lower on the jobs number, and where we reversed to the short side, at 41.26. Given our entry here on the long side was at 40.11, we still took 15 points or so out of that one. The short loss in here, as I said, was 12.25. So we're short heading into the new week, and had a couple of bounces up after the sharp drop in early trading. So it'll be interesting to see. As I mentioned in the subscriber only video, the flips are not influenced by either the volume analysis or the stochastic confirmer, which has turned negative and is declining and right in mid-range at this point. This is the daily chart. We did hit our next target here at 31.32 during the week, and still positive. Made a little bit of progress on Thursday. A new high here at 41.73. Was a bit lower on the day, but let's look at the reversal levels as we start the next week. Here's what we look for the daily. We're still positive for 39.47. We hit the target at 40.44, 41.32.76. Reversal level, close only of course, is 40.55.68. In the 260, we're negative as of 9:40 on Friday morning, 41.26. So we're down a little bit. We closed at 41.41. Our reversal level is not too far above the close at 41.56.42. So for the week, the long position from last week, if you still had it on the 2nd, you were stopped out for another 137 points, but we hit three targets, so you may have been out totally. Short position, a loss of 12.25, and then on the long position, we took part off at 41.56 for a 44.8 profit, and we're stopped out of the other at 41.26 for a 14 point. So all in all, a profitable week, but not nearly as good as the past couple weeks, but that's the way it goes. At least it was profitable. Of course, past performance is no guarantee of future results. Let's look at some other charts. Let's first look at the weekly. A weekly chart of the QQQs bumping into this longer term downtrend. We finally surpassed the 38.2% resistance. Next is the 50% at 339. Trouble talking this morning. And that's the next plausible target. It's been obviously three good strong up days, and it's well off the lows here, which was at 269. So AD line has moved further above its moving average, which is starting to turn higher and is in a new positive trend. The SPY has the 50% resistance for it. It's at 421.08. You can see this corresponds to resistance back in this level. AD line has broken its downtrend, so that is consistent with an intermediate term low. Any pullback should hold above the moving average. Obviously, the moving average looks stronger on the NASDAQ 100 AD line. A break at this support would indicate that the entire rally from the lows is over. Looking at the daily charts, you can see we've been holding above the 100-day moving average of the SPY, which is flat at 109.52. Converging support here at the 20-day EMA, which is at 479, and then just below that is the monthly pivot at 398.69. So we look down there, the SPAD line has broken this downtrend. We're holding, pushed back up after the pullback last week, which is a good sign. Of course, now we need to see it move above that last peak. Stocks only has still not broken its downtrend, but is positive and its moving average is rising. And the NYSE All AD line, has broken its longer-term downtrend this week, so kind of go in stages. It formed this bullish divergence we've been talking about for a while. Then, that was confirmed. We moved above those two peaks, so broke the next downtrend. So tacking on the positive signals, as is this. So its moving average shows a pretty positive trend here, and so any pullback should hold above that. From the sentiment picture, only a slight uptick in the percentage of bullishness. If we were up in the 38 to 45 range on this number, I'd be a little more nervous about a sharper pullback, but it's still quite low, suggesting that even if this is a rally and a downtrend, which I do not think it is, it should still have further to go. Most encouraging thing was the NAAIM. That's the equity exposures of active money managers. I think I mentioned last week I was looking for a move above 50, got to 55.28. So now we'll look and see how it does when it gets up to that 80 level. And as I mentioned, the weekly AD line has broken its downtrend also. Yield curve got a lot of people worried last week. You can see this is the 10-year minus the 2-year, so it dropped pretty sharply in the past week. It inverted again, earlier in the year, and it inverted in 2019. So, ahead of the COVID thing, decline, recession, whatever you want to call it. Back in 2006, it inverted the first time, rallied up, dropped back below zero again in the latter part of 2006, and stayed below it for a number of years. Of course, the recession didn't officially start until the end of 2007 or 2008. So there is some lag time here. A couple more charts. The growth value analysis is rising. Okay, this is the ratio of the growth index versus the value. So that's positive for growth. That's why the QQQs are still doing better. Resistance up around here. You remember when it's falling, then value is outperforming growth. Yields bounced on Friday. You can see this nice big bar up here. We're closing at 2.84% on the 10-year yield. So MACDs are still, there's a slight divergence on the histogram, not here. We could be bottoming here, but of course we dropped below Thursday's low, which was 2.656. That'll indicate another push to the downsides. This certainly looks to be a head and shoulders top, and lots of resistance up here. So far I'm not impressed by the rally. Market's going to be on pins and needles till Wednesday. We have small business index on Tuesday, productivity, and then of course the consumer price index at 8:30 a.m. on Wednesday. That's the big number for the week. And we also get a preliminary sentiment reading for August on Friday. I would expect that to uptick. So that's all I have for today. Hope you have a great weekend and look forward to another good week of trading. Thank you.